Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I am a financial advisor, but this is not financial advice. In this video, I want to do a little bit of Q3 projections, and we're going to get granular with this, take our time with this. Okay, not just super back the napkin math, but let's really try to look and think. And today we're going to really talk about SG&A and what might that line item be in Q3. Before I get into it, I just want to say thank you so much to my viewers, to you guys. Thank you to the subscribers. We just got 2 more subscribers. Thank you, you two people. And thank you to anyone that joins as a fan to have some fun ways to interact with the channel. And thank you to anyone that joins as a friend to get access to my GameStop spreadsheet. Okay, SG&A projecting for Q3. There's a lot of ways we could look at this. And so let's take our time with it because historically, one thing you want to think about is not just what are the near-term trends of SG&A, but also historically, what's the difference between Q2 and Q3? Does it normally go up or down? Now we see in 2021, SG&A was coming up every quarter, and there was a lot of changes going on in the company at that point. So maybe that's not the most reflective historical year. In 2020, you saw a really slight bump, pretty steady in SG&A. And then in more recent years, 2022, you see a big drop, like whatever that is, percentage wise, but a $60 million drop Q1 to Q2, and then flat Q2 to Q3 before a bump in Q4. Now, year over year, they still cut SG&A by about $30 million. And you'll see in 2023, they cut SG&A by $350 million. And yet still, there was a bump from Q3 to Q4. Now, why would SG&A go up in Q4? Basically, you have to hire more employees. Maybe your stores are open longer, or maybe you need 2 or 3 employees per store on a seasonal basis. Because again, 40% of GameStop's revenue comes in Q4 alone. Whereas Q1, Q2, Q3, maybe store traffic is slow enough to where you can just have one person working the store. And so labor costs are probably the biggest line item within SG&A. But we know that we're also cutting consulting fees, cutting marketing costs over the years. But you see, about a 10% drop quarter over quarter in 2023. In 2024, even though they cut about $200 million over the whole year in SG&A, you see a lot of that drop happens Q1 to Q1, right? $50 million in that kind of one-time drop, and you end up seeing that 50 million kind of hit again in Q2 and then stay steady throughout the year as far as how much SG&A they're hitting per quarter. And rather than it continuing to go down by even more on a dollar basis, their year over year savings on SG&A were certainly realized, I think, but you do see a slight bump from Q2 to Q3. You don't see a huge movement there. So some quarters, some years, you see about maybe a 10, 15% savings Q2 to Q3 on a dollar basis, right? But a lot of times it's flat or maybe even a slight bump on a dollar basis. Now, this is relevant because really we know that a lot of GameStop store closures probably happen in January and February, which is January is technically a part of their Q1, right? And so, or maybe in February would be a part of their Q2. So you're going to see a lot of their savings on labor costs, for example, which they're saving on labor costs through closing more stores, right? They don't have to hire as many employees because they don't have as many stores. And then you just kind of see that level out throughout the year. So I don't know, Q1 to Q1, you see a $70 million drop here. Q2 to Q2, you see what's that, $62 million drop. If we scroll down to our metrics, change in SG&A on a percentage basis. So you could think about this on a dollar terms basis, like we've started talking about a little bit. You could also calculate this on a percentage basis. So on a dollar basis, based on what we just looked at, say, okay, to be relatively, I don't know, conservative or historically accurate, it's probably going to be around 218.8 plus or minus 10%, which would put you at what's 10%, about $20 million plus or minus. So something like a 200 to 220 as a rough estimate just based on dollar value when you're thinking about historically, what is the difference? Or sorry, this should be 240. On a dollar value difference from a Q2 to a Q3. So that's one way to think about it is, hey, it's going to be something like that. Another way to think about it is, well, what about the percentage change? Where were we there? Change in SG&A. Now, again, over time, this has changed substantially, right? They were kind of not doing much in 2018, 2019, but they had a 20% reduction in 2020, and then it came up a bit, flat in 2022, 21% reduction in full year 2023, 15% reduction in 2024. But in the most recent 3 quarters, so on a full year basis, 2024 was a 14.62% reduction. On a quarterly basis, year over year, so Q4 to Q4, it was a 21.35% reduction. Q1 to Q1, 22.7% reduction. Q2 to Q2, 19% reduction. And using that metric there, you could say, okay, well, for 3 quarters now, it's been pretty consistent in that 19, 21, 22% range. I think if you were to take the average of these numbers, what is it? Plus 21.35 divided by 3, a 21.08% reduction would be if you were to take the average of these three on a percentage basis. So you could go to, well, what was the Q3 of 2024 in SG&A? 282. And if you took 78.92% of that, right? So a 21.08% reduction, you would get what? Times 0.7892. Not plus. Not plus. That's not going to do anything for us. That would put you at 222.6 as kind of our second estimate for what might this number be. If you were to just say on a percentage basis, they're going to continue this trend. I don't know where to put all these numbers for now. But for now, I'm just going to put them next to each other. But we will end up picking a number that we like the most and slotting it in there. So looking at trends, it's going to be plus or minus 10% of what Q2 was historically on a dollar basis. Percentage trends, you're looking at maybe a 21% drop. Now, getting even a little bit more granular, why was this full year minus 14.6% when you see this 21% hit in the full year 2023 and the end of 2024 and the beginning of 2025? So what about Q1 to Q3 in 2024 was an aberration from kind of this cost decline trend that GameStop has been on. And I think the most important thing to discuss here is that a portion of their SG&A, even that is store related, is not related to the continued operations of the store, but related to costs of closing the stores. So there's money involved with closing their stores, and they say as much in their 10K. This is their 10Q, their most recent one. They're talking about what their objectives are within their retail business. And a big one is achieving profitability, which we know they already have done, but they're saying we're continuing to optimize and we will continue to focus on cost containment and look to operate with increased efficiency. And then they say, in connection with this goal to achieve sustainable profitability, we are evaluating all of our operations and we're eliminating redundancies, aka stores that are too closely located geographically. And so if we have two stores within a 2 mile radius, we're closing one of those stores and we're eliminating underperforming assets. So if your store is not making money, we're cutting it. If your store is too close to another store, we're cutting it. And guess what? Since 2023, they have exited Austria, Ireland, Switzerland, Germany, Italy, and Canada, and coming soon, France. Now, listen to what they say about their SG&A slash store closures, because this could help guide us on how do we project this looking ahead. So they say in 2024, they reviewed their store count, they reviewed their operations, and they ended up closing 590 stores just in the United States in 2024. It says, while this review is ongoing and a specific set of stores has not yet been identified for closure, we anticipate closing a significant number of additional stores in 2025. Note that they say this after already saying that they've listed Canada and France for sale. So Canada and France are off the books. Now they're just talking about the United States right here. They're saying we closed 590 last year in the US, and we are going to close a significant number more in the US. Closing stores, not selling the France stores, not selling the Canada stores, selling stores. There are some people online that think because GameStop is profitable, now they are done closing stores. They are not done closing stores. Okay, they are probably have already closed about 1,000 stores. Now, 500 of those are Canada and France, so they've already closed approximately 450 more US stores. Um, and we'll see, we can project this as well for what they'll do. But once we have the numbers, we'll be able to calculate about how many stores have they closed using the current portion of their lease liability, as we've talked about already. All that to say, the store closures comes into play because of this next sentence. While we expect our cost containment efforts to yield reductions in SG&A in the long term, we have incurred and may continue to incur one-time costs, non-recurring costs related to these efforts in the short term. So it costs them money to close stores. And in 2024, they closed 966 stores compared to 244 in 2023. So this pace of store closure is almost 4 times what they did the year before. And that temporarily inflates their SG&A. It's hard to see the SG&A inflation because look, they still save $200 million in SG&A year over year. But their raw SG&A is certainly much lower than this 1.1 billion they reported in 2024. That's an important thing to note because one, it costs them money to close stores, right? But also, they're saying that the full um, cost containment benefit is a long-term benefit. So not only does it temporarily inflate SG&A, so you have added costs, it also doesn't decrease the SG&A really until you're looking into the following year, right? When you're already more than a year removed from the store closure. You've already finished everything about that. But the thing is, they are still continuing to close a significant amount of stores in 2025. Sorry for keeping these text boxes too low. I'm going to work on getting more consistent with that, guys. So all that to say, I think their SG&A will continue to come down as we've already seen, right? We've already seen that some amount of the work that they did in 2024 and in years before is starting to hit the savings in 2025. But we also know that some of these numbers in 2025 that we've already seen are related to store closures that they've already done. And so, all that to say, if I were to lean more on the high end or low end of this range, the 240 or the 200, based on their store closure trajectory, I would think it would be on the lower end of that range. And then when you're projecting a year out, how long can they keep this up? How low can SG&A get? Particularly as sales rise. If sales continue to grow, you're going to have to hire some more employees to help sell this stuff for you. So it's not like SG&A is just going to go all the way to zero and then poof. And that's why you see that bump in Q4, right? You're just selling so much so fast that, yeah, it's going to cost some money to sell that stuff. You got to hire someone to sell that stuff for you, right? But I don't think we're at the floor of what their raw SG&A is going to be. And we're not going to know for probably another year or two what that store-related SG&A is. This non-store related might start ticking up as the company begins to grow and grow, which, by the way, they only started reporting this, splitting this in their most recent 10K. So because they put this figure in their 10K and 10Qs, they also have to show the year over year numbers. So we have our full year 2023 and Q1, Q2 of 2024 splits for what part of their SG&A was store related, what part of their SG&A was not store related. And once we get their 10Q and Q3 of 2025, we will also get the year over year numbers and know what the Q3 was in 2024. And obviously, once we know what the Q3 is in 2024, we will also be able to deduce what the Q4 was because we already have the full year numbers for 2024. So that's exciting coming in December. Right now, we can't do that much with this information because we don't have enough trend analysis to go off of. But we know that they're raw, what does it cost corporate GME on a Q1 basis? They saved a good chunk, about $6 million, right? But on a Q2 basis, they just saved $600,000. So it seems like they've just about saved as much as they can save as it relates to what they spend on marketing, how much they pay their employees, etc. But on a full year basis, they saved a good chunk 2023 to 2024. So I'm wondering if maybe in Q3 or in Q4 we see a bigger move. So far, they're on pace to save 8.8, or they've already saved 8.8 million year over year on the non-store related SG&A. But as you project this Q2 to Q3, it's really hard to say what it's going to be because we don't know what it's ever been before in a Q3. But I'm going to guess that let's say they're landlocked at the 34 price, and really it's just how much does the store related SG&A come down? Could this be 32? Sure, but it's a drop in the bucket compared to the store related aspect of their SG&A. And all that to say, we also don't know the split year over year, but I was wondering, if we took their store related SG&A and divided it by their store count, and we don't know their exact store count on the quarterly basis, we're just approximating it, but we do know the exact store count on the annualized basis. And we know that on an annualized basis, check this out, the store related SG&A per store. So you're just taking this, what they report as this amount of our SG&A, the 1.3, 1.1 of it was store related, and then you're just dividing it by here's how many stores that they say they have, right? You're multiplying that higher figure to put it in thousands terms so that the denominator is accurate because this is not 4.1 billion stores. This is 4,100 stores, right? Total SG&A or store related SG&A per store is at 270 in 2023. In 2024, it was 300. This is probably even more impressive and more telling than we know. And maybe it gives us a clue onto just how much of their SG&A, their store related SG&A costs were focused on closing stores. Because we know that their total revenue came down huge year over year, right? Their change in sales was down almost what? That's like 20%, more than 20% year over year from full year 2023 to 2024. And we know that their stores were dropping considerably. What I'm saying is, it's not like they were hiring more employees to work more hours. They didn't even have any new line items yet. Like, there wasn't anything to sell, right? The Switch 2 hadn't come out yet, right? So for SG&A per store, and particularly store related SG&A per store to be up, you were at a, 60K figure, 65K figure per store per quarter. And we don't know what it was year over year, but we do know for the full year, total SG&A per store and store related SG&A per store went up 10%, even though total SG&A went down 20%. I don't know how that helps us as far as modeling future SG&A currently, but what I'm trying to express is that there's no way that their raw operating costs went up on a per store basis. This is all closure costs. And again, we're going to have maybe similar closure costs in 2024. We might end up closing another 400 or 500 US stores in 2025 and end up with half the store count a year from now than we did now. And if that's the case, man, how exciting um, of a thought to imagine what the SG&A could be like another year from now. Because as we see at the beginning of 2025, this store related SG&A per store is actually going up. Now, this is a little bit tough because this store count already takes out France and Canada, but their SG&A includes France and Canada. So I wonder um, if they tell us, I know they do somewhere. Where is it? SG&A. Okay, so Canada's already off. in 2025, but Canada was still in the books for 2024. Europe, their store-related SG&A for their France stores was 26.8. So if you were to net that out, then let's see what it would give us for Q2. Minus 26.8. Store related per store would be 70K. So even netting out Europe, you're still at a 15%-ish increase in SG&A per store. Some of that could be like genuine, like as more and more buyers buy online, like there's a cost to e-commerce fulfillment that the stores are having to front. Like right now we're just illustrating it per store because they don't break out what percent buys online versus what percent buys in store. And we know that they don't even necessarily want to distinguish because they want to be omni-channel, right? We're just one retail experience. So even netting out Europe, though, again, what this tells me is that for another year, you might see these store-related SG&A per store figures come up, which means that there's that much more room for the dollar figure of SG&A to come down because there's that much more evidence that SG&A is continuing to be inflated by their one-time costs, as we read earlier. The store closure costs is bumping SG&A higher than it needs to be, but I don't think you can um, illustrate that changing yet. They closed a ton last year. They're going to close a ton this year. If we have a year in 2026 where they say we might close a few more, then I think you might see this SG&A drop off a cliff. Like you might see a 50% reduction year over year. I know last year, um, after their 10K, I was kind of guesstimating how much of their SG&A was associated with one-time closure costs. And my guess was 126 million. $126 million of 968. My guess was related to store closures, and I felt like that was being pretty conservative. So all that to say, that's another, and it looks like they're closing stores this year, maybe even faster than last year. Like I think the store closure number for the year is going to be more than 966. I really do. So again, that's maybe in this year, it might be 160, it might be 200. So that's another 40 or $50 million per quarter that's going to immediately drop off of SG&A. That's the extra that you had to spend that's immediately going to drop. Plus, you're going to see what actually dropped from the ongoing expenses. You tracking with me? If you're paying 100 employees, this year, plus you had to pay some severance and closing 100 stores, and then this year, you don't have to, or really it'd be in 2026, you didn't have to close any stores, or let's say you only closed 10 stores instead of 100, and you're only paying 40 employees instead of 100, right? So you're saving that 40 or 50 million on store closure costs per quarter, but then you're also saving the even more, like the even bigger cost, which is the employee cost. So anyways, super excited to see where it goes another year or two from now as GameStop kind of bottoms out with what they want their store count to be. I think they'll end up around 1,000 stores, but I don't know. All I know is Amazon only has 550 stores between their Amazon lockers and Whole Foods locations, and Chewy had even fewer stores than that. So I think we might end up with a drastically small footprint and a drastically high percentage of sales volume coming from online. All I'd say, I don't think you can expect that big drop off to happen in Q3. I don't think you can. I don't see a lot of trend to know why the non-store related SG&A would come down. And trend wise, on a percentage basis, this would tell me SG&A might be at 222. And the question really comes down to how many stores have they closed? Are all of those costs realized? Like, for example, I think that they closed 188 US stores. So 500 of that, right, is just US, or sorry, just Canada and Europe being taken off the books. I think they closed 188 US stores in Q1. I think they closed 262 in Q2. So last year they closed maybe 300 stores in Q1 and Q2. This year I think they closed closer to 400, maybe 450 stores. Last Q3, they closed 370 stores in Q3. So like what I'm wondering is when they close 370 stores approximately in that one quarter, how much of the closure costs happen in that one quarter, right? And then in Q4, they close, you know, 20% fewer stores, but they're also having to hire some more employees. And so their SG&A ends up being flat because they're paying more for the stores they're actually operating. But are they saving that money? The money they spent to close these stores in Q3, is it pretty much all spent in Q3? Another way we could think, like, I wonder, so Q1 and Q2, it's not the best example because this is basically 188 to 262. And again, those are kind of similar figures, right? Is there like, this Q1 to Q2 in 2024, their SG&A in Q1 is 295, and they might have closed 222 stores. And then in Q2, you see it drop $25 million quarter over quarter, which is pretty strong. Is that related to the fact that they closed 150 fewer stores in that quarter? Again, Q1 to Q2, obviously they probably didn't add stores. So how exactly this smoothed out in this particular year, it's hard to know. But their SG&A was 345 in Q1 and then came down in Q2. But data-wise, feels harder to draw a conclusion from that. Because if they actually did add stores, then that would obviously cost money. What about Q1 to Q2 in 2021? This one's tough because their SG&A was coming up throughout the year. So I don't even know if they were in their cost-cutting mode yet. Q3 to Q4, again, you would normally see a spike in Q4 in SG&A, and you do. Q2 and Q3 were very stable. Were estimated store closures also similar? Yes, they were very similar. You could probably run a model on this to like get a better idea. But to me, it feels like mild evidence, maybe weak in general, that their full store closure costs are realized in the quarter that they close the stores. I think there's probably some costs that they can choose to realize it within that quarter or delay it a quarter or pay it in advance in a quarter. So I think this is maybe the weakest evidence of all, but if I were to guess in Q3, the reason this is all relevant is because how many stores are they going to close in Q3? If it's zero stores, then you would maybe see a little bit bigger of a drop, right? Like you would assume surely a decent amount of that 262 does hit in the quarter as long as they're comfortable paying it and they had plenty of money to go around. So I don't think they would have needed to delay it for any reason. You know, at the end of the day, you just got to pick a number and projections don't matter that much. But I wanted to start with SG&A. The reason I say projections don't matter that much is because what really matters is what the company actually does, not whether you successfully predicted the exact dollar. It's kind of like no price target, just up. It's like as long as you know the trend and you have a high degree of confidence and substantiation with the trend, then you can sleep easy at night, right? So eventually we're going to see this have another pretty big drop whenever they're done with the major store closures. I don't think that's yet. But part of me just feels like maybe they front loaded some of their store closures, you know? Like maybe they did. Like maybe they they did as much as they could to make Q2 seem as weak as possible to buy time and to make Q2 look that much more explosive. If store related SG&A is down about 10% here, down about 10% here, but we know that store related SG&A for Q1 and Q2 together equaled about half of Q4 or at half of the full year. So if this number is half of what the full year is going to be, the full year is going to be at whatever that is, 730. And if there's going to be a bump in Q4 because it's Q4 and the Switch 2, it's hard to say. Like I kind of what if if I just made this equals the sum of AH20 and AH21, and then if I made this 179, if I made this the sum of those, no, don't put in minus 730. So if this is half of the full year, then a 179 store related cost in Q3 would imply a 174 store related cost in Q4. I think Q4 will be higher than Q3 because they have a bunch of popular products and it's Christmas time. So I'm gonna come if what if I make it 170 in Q3? That makes it 204. If I make it 165, then I'd then be projecting a 10% drop quarter over quarter and change in SG&A would be 30, more like 30% year over year. And then hypothetically a bump to around 190 in Q4. Oh, feels risky. I wish we had this data. Q3 and Q4 were just so steady that that might feel like a bit too big of a chasm. I'm gonna stay 204. That's my guesstimate for SG&A for 2023, or sorry, for Q3. This is exciting because if it is around here, then SG&A as a percent of sales is gonna plummet because obviously their sales are going to project to be higher. We'll save sales for a future video. If you got anything out of this, hey, thanks so much for being here. If you have any other ways to estimate or to project what SG&A is going to be within, just a 1 quarter out basis, would love to hear it. And if you have any different thoughts on, I think we're going to have a pretty significant drop in SG&A maybe a year from now, maybe 2 years from now, whenever they're done with the aggressive store closures and they start leveling off into just mild store closures, I think you're going to see that impact SG&A in an even more extreme way. Although somewhat offset by revenues will be increasing, and so some stores might have to start hiring to employ, like it might get more expensive genuinely per store, and that will obviously cause SG&A to come up in a dollar figure amount. But I think SG&A as a percent of sales is going to continue to trend down pretty impressively, probably for several quarters or maybe even years in a row. But we'd love to hear what you guys think if you see anything differently. And that's all I got for you on this one. I'll see you next time.